Okay, so midweek forecast, just tying up with preparing for tomorrow. So effectively, what I normally do is I'll run through all the pairs that I've been looking at throughout the week, and just really go down from the higher time frame down to the lower time frame to see how things have materialized throughout the week. And as we can see, on the monthly chart, you're going to just see basic overall structure playing out. So this month, obviously, we can see it's effectively turned into a bearish month. These are the type of things you want to pay attention to in regards to how the market has reacted to certain zones. So the reason that the top wick here is marked is because this is an area of inefficiency. This is the optimum price entry for the market to then test this as a supply zone and then reverse down. So what we are seeing this month, obviously the market's come up, tested the wick, taken out the previous wick, however mitigated deeper into this supply candle here with the wick above, and now it's basically breaking down. We're anticipating this month to then obviously close bearish, and what it will do is it'll make price efficient in this area, and then possibly the following week it'll continue up, retrace up into this inefficiency and fill up areas that we've got marked up here higher up. And this is obviously on the DXY, so we're seeing this directly correlate with what's happening on the UCAD as well, and then it just trickles down into the other majors. When you then go down onto the 2 week, you can see in a better form of detail exactly what's happened throughout the week, where you've had rejection to the downside here. Lows have not been broken. They've been respected at the level they were created here. It's worked its way up into a supply candle, which was a reason for break of structure to the downside here. However, it's now come up into that supply candle, is being tested, mitigated, being rejected down from the zone after taking 50%. It's now testing and it's retracing. So what we may see over the next week or so is this candle comes and finishes bullish. And what this does, it actually introduces supply into the market, which is a form of liquidity that will then allow the market to continue up higher. So effectively, the market comes in, catches its breath, moves up, catches its breath, moves up, catches its breath. And that's what inducement of supply and demand is. On the way down as well, the same thing happens. When the market starts to move, you've got a supply candle induced, it comes down, supply candle induced, comes down, and it continues. And when it moves up the other way, you'll see pretty much a mirror image of what happens on the other side. So here, demand induced, demand induced, demand induced, and that basically allows the market to continue on its way up. We've obviously seen mitigation here for the supply candle. What we want to see is over the next couple of weeks, when this basically develops into November and December, that the market moves up and breaks these highs and starts taking an inefficient price level here, which is the projection that we've got marked on here from a little while ago now. It still stays active. When we go down to the daily time frame, it still seemed to be playing out this week. So what we were actually looking for since the beginning of October was the Dixie to come down, reject into this demand zone. It didn't do that, took the inefficient price level here, came back, tested deeper, has come back down, has now touched the daily demand and is now rejecting off it. Considering that it hasn't actually broken high up into the supply level here and continue to respect it, we may actually even see a rejection off this supply candle now, which will get formed. Again, we'll know when the market comes into that area, and then you may see a rejection to the downside here. So effectively, this move here now could do this. And it will maybe test this demand, then move up higher because it hasn't taken liquidity that's lying in this zone fully. It's just literally tapped the liquidity and just reacted off it at the moment. So that's something to bear in mind. When we go down onto Euro USD now, we'll stay on the daily for the remainder of the charts and then move our way down into the lower time frames as the market develops. So what we actually were anticipating here when the week started, we were looking for a test up into this supply that had been left behind, which caused the break of structure to the downside to show us whether the market was actually looking to go bullish, to go bearish, test this daily supply and then react off it down to take price lower on the long term. Market is actually consolidating at the moment now, even after having broken structure on the higher time frame. It hasn't actually tested the supply. It's reacted off the imbalance perfectly here. As you can see, where the wicks come in, it's respected over the previous 3 days and last week, and it's continued to move down from that area. We're hoping that it now actually comes and tests the demand at the bottom here and then gives us a reaction to come up into this supply and then reject bearish, which will actually confirm this higher time frame break of structure that we've got marked up here. So on the lower time frames here, we're still looking for pool of liquidity being created here. So you've got equal highs, equal lows. There's a range occurring in this entire area, which we can clearly see formulating, and it's got to give us the direction that it wants to take. So we're anticipating some form of liquidation of either the highs or the lows in this area to then show us which way the market wants to go. But until it doesn't do that, there's very little that you can actually do and anticipate taking in terms of a trade, because you don't know which way the market's going to move long term. On a short term move, you may get caught out. We've seen obviously some great moves early part of this week as well, where London open on Monday, sold down, continued to sell down, and at the moment now it's actually being held up by this demand down here, which is actually holding price up at the level that it is. So right now it seems as though the sells are being held up and the price action is actually bullish, because it hasn't tested this zone and it hasn't broken above here for now. So price is being held up for whatever reason. We want to obviously see some news come out toward the tail end of this week, and we'll see whether that actually causes a reaction one way or the other, and then getting on a move that's confirmed. That's EU. EJ, pretty much the same. If we have a look at it, we basically are looking at rejection now from a supply level up above. Equal lows are left behind here, tail end of the week. It's coming back up, tested the supply, it's now rejecting off that, and I would anticipate it continuing to reject off this on the daily. When we see what's happened over the past 2 or 3 days, we can see the supply has been respected, rejected off, break of structure to the downside occurs here, confirmation of break of structure, retracement occurs, it doesn't break higher than here, so confirms sells, and we should now be in sells for the remainder of the week. What we are actually looking at here is when the DXY starts to strengthen itself later on in the week and into November, we want to see this continue to fall and respect the move that is kind of printed here on the daily time frame. Lower time frames, obviously you've got yo-yoing back and forth, which again is difficult to trade because the market is so grouped and bunched, but we have got break of structure to the downside occurring. The demand zone is currently holding up price here on the 4 hour. On the 8 hour, there is no demand zone, but effectively it's being held up by the shorter time frame demand here. We want to see what happens tomorrow, how the market opens, and it's possibly a continuation to the trend that is now being formed on the downside, which is what this was as of yesterday morning when I marked this up to project sales and movements for today. This is what we were looking at, selling down, coming up into a supply zone again, and then selling down further. So we're targeting at the moment this demand zone that the market should come down into, show us a reaction, or whether it wants to go bullish at this point or continue bearish. Now, bearing in mind this demand zone has actually been a means to break price higher, and it's broken a previous structural high here as well as here. It is an important area. If it gets respected, then it's a reason for the market to continue up. However, I think it's just going to be a liquidity bait. Market will come in, reject off this, go up to a higher time frame supply zone, and continue to sell down. So our bias for EU EJ still stays bearish until the market shows otherwise. And to do that, it has to break these highs, and it has to break these highs to show us then the market wants to continue bullish. GU, again, some very good trades this week. Early part of the week, our projection, I don't know where I had that. What was the path? Okay, I didn't have a path marked up on this. So what we were looking at is where GU was supposed to be coming into supply zones here and selling down. On the daily, we can see that the market has respected the supply zone up here. Very, very early sells. I got these on Monday of this week, where the market came in, tested this supply zone with this wick, and has continued to sell the remainder of the week so far. What we're anticipating is the market has actually sold down into this 8 hour demand. The demand has actually held by a very, very small margin on the higher time frame. So we're expecting the market to come back up, test areas later on in the week, and then possibly sell down further the following week. However, this demand could turn support. So effectively it could be demand turn supply, where you could end up with this happening tomorrow, and the market then continues to break higher and test zones further up. Now that all depends upon the DXY, how it reacts and what it does, and obviously news factors that come into that as well. But at the moment, GU is giving mixed signals. It's respected supply above, it's respecting demand in the interim, hasn't broken structure greatly to the downside for us to be confirmed for sales at the moment. It has played around in between. There were good moves that could have been had on the lower time frame, where you have London OTEs opening up, as I've said before, where you get into certain areas and zones, the market comes in, respects a level. This is now our protected high. We also have a supply zone marked up at this level, which is basically being respected. The market comes down, breaks structure to the downside interim, breaks structure to the downside again here, confirmed sells at this point short term, comes back, retraces, tests supply again, respects the previous protected highs, and this is where you wanted to get in on a sell. Now this sell obviously was Monday, London OTE, beautiful, beautiful trade, and you could have effectively have been in this trade long term. I took this trade in London. I actually exited when we hit demand here. So I collected 60 pips from this, and I was expecting the market to come back up and respect this level again and test this wick for continuation of sells. Monday, Tuesday, Wednesday even. It hasn't come back into this one. It's actually done a continuation of the move to the downside. And we now possibly will see whether the market tomorrow and throughout the week will actually continue this trend downside, or will come back, collect liquidity in this area, and then push lower, or use it to then bait people to go higher from this point. Again, we don't trade projections. We just do what the market is showing us, and we get in on the trade after it's confirmed the direction. Right now, GU is bearish. It has, however, been held up with equal lows down the bottom here, which is the reason for the market to come and liquidate. So anytime you see equal lows, which we'll just mark up as well. So we've got equal lows left behind. What we want to see is the market comes back up, tests the supply, and then sells down to take the liquidity that's left behind. And it would be a reason for it to then target 1.65, 1.67, and then reverse back up to collect liquidity up above if it wants to. It has left behind inefficiency here. So we'll just see what it does and then decide how to trade that. Again, principal times, you can see very clearly here, London OTE, New York OTE are where the market moves the most. And if you just literally just place your markers, London OTE, New York OTE, New York OTE, London OTE, London OTE, London OTE, London OTE, New York OTE. Every single move happens between 9, 10, or 1, 2, depending upon when the market trades in. But you can see very clearly that all the major reactions that we see happening, where the market starts to trade from a certain point down to a major point and it gets respected, it always happens in and around London Open, New York Open, London Open, New York Open, and a couple of hours around there. So these are areas that I'm very, very careful about selecting and market, and being sure that you're actually in a position to trade. And the only thing you want to do there is look for supply and demand candles that the market could respect and reject off. Here you've got a confirmation of sells. You want to see the market come down. It comes off a lower level demand zone here, comes back up, tests the supply that it moved off in Asia, and then continues to sell, continues to sell, continues to sell. So this trade could have been held for 2 or 3 days. Does the same thing again in New York. However, what happens here, between London, New York crossover, the supply that got tested very, very loosely here gets taken completely. These highs get liquidated for people that are in long-term sells, get liquidated here, and the move continues even bigger than it was before. So just bear those things in mind as well in terms of looking for premium entry prices and the market to basically target certain zones. I'll remove these later. Right, so we've gone over GU. We're probably looking at a test tomorrow throughout Asia for the market to come up, test the supply, and possibly reject off that supply to break the equal lows that is left behind, and then head down towards 1.367 and see what happens at that point. So really, we're kind of still in line with the projection that we have here. However, it's basically skewed a little bit in terms of it now possibly going bearish from this point, hit the supply, come down, and we'll see if it tests below, or it comes up, hits the supply, comes back, hits the demand, and then it may even go bullish to test inefficiencies left behind here to then possibly sell back down. GJ, again, projections are on the chart from earlier in the week, and we can see what has happened thus far. So we were anticipating the market to come down, test a lower level demand zone, which we've got marked up on the 8-hour, and it hasn't basically tested that as yet. It's been held up by it, touched it today, and is now looking to go bullish. So the supply has been broken. That's been taken out. However, it's respected the supply on the higher time frame further up, and the market has rejected off that. It's called the break of structure interim. It's being held up now by demand. We want to see what happens with this demand over the next few days. If it gets respected today and tomorrow, it may well be that GJ is going bullish for the interim and then looking to test higher price inefficiency here, come back up to the supply, and then sell down. So our projections stay valid. We're going to see what happens with this demand, whether the market holds or it basically gets broken through with a pullback and a retracement deeper. AU, again, we had projections from the beginning of the week. I took a few trades on this on Monday. Short-term sells that basically gained profit just to basically tie in line with the DXY movements. We were anticipating movement beginning of the week to come down, test supply and inefficiencies that's been left behind. It hasn't actually come down to test the inefficiency. The reason for that is it's being held up by demand that's basically holding the price at this level, and it's consolidating right now. It's come up, tested wicks again. It's a very, very tight bunch at the moment. We don't know what price action is doing specifically. Even on the lower time frame, it's a very, very tight group. So what we're looking for is continuing upside on the shorter time frame. However, we do have supply up above that is still being respected and held. So at this point, we're still looking at this level being protected. We want to see how the market comes and reacts off this. It's currently now changing character, it seems, as of today. Highs have been respected. It's continuing now to go bearish. We want to see what happens in terms of it testing demand down the bottom here and see whether it kind of reverses back up or this now breaks and changes character to the downside by taking London lows tomorrow. And it may well then come down, test demands on the lower time frame that we've got marked up here already, and see whether it then actually reverses or continues bearish. AJ, similar scenario. There are obviously trades on this that we've had during the week as well, but we're looking for, again, the similar type of reaction to AU. Demand and supply is being tested. The market is very, very grouped at the moment. We want to see what happens in the lower time frames and then decide exactly which way the market is going to trend. So right now we've got equal highs and consolidation of the market there. Lows are being protected here. Supply is holding at the top, demand at the bottom. So even now we don't really know what's happening with this in terms of a longer term move. Yes, lower time frame the market is bullish. However, it's being held up by supply, same as AU. And we just want to see how the market reacts to these levels in the coming days, and then decide what our projection will be for next week. This week has not been a great week, to be honest with you, in terms of structure and large-scale market movements. Very short-term trends and short-term spikes and movements intraday, as we can see. There were trades on the bearish side that we got counter-trend trades put in. However, we're looking now for a reaction off the supply to confirm bearishness that is currently being drawn back into, and then continuation will probably happen tomorrow if we see that happen. This supply may also get held tomorrow on AJ, where we have the market testing this area, probably over Asia. We want to see if it holds and then decide what to do with that. NU, again, short-term trades that we took counter trend during the week, where very similar scenario. We've got price being held up by lower time frame demand here. So it's being held, and then higher time frame supply is also being respected. So we've got bearish movement at the moment, bearish being confirmed. Even though we have a break higher here, it's still over long-term bearish. Highs are being respected. So at the moment, we are still potentially short-term bearish on AU. We want to see how it reacts to this demand. If it gets tested once again, then fine. However, we might see the lower time frame moving up higher to test supply further up and see whether the market then decides to go bullish. Until we don't get a confirmed move in price and price action is not clean in one direction or the other, best to stay out the trades, because you're just going to get whipped out in this liquidation pool and consolidation that's happening. UCAD, the mother of all evils today. So effectively what we were looking at on UCAD over the longer term was a retracement bearish, then go bullish. We have seen it respect higher time frame demand at this point. So demand is being held right now. It's reversing bullish, it seems, at the moment. However, it's playing a very dirty game, because today, even though the entire week has been bullish, from literally last week until now, it's been trending bullish. Today, it decided to reverse on the news, Bank of Canada interest rate and monetary policy statement, and has literally taken every single bullish position out until the demand of last week. So this demand right now is still holding, and the price literally comes back, touches it, and continues to move off. Now, what we want to see is whether the price is a continuation to the upside. We want to obviously see this inefficiency get filled. It may well then be that the price comes back, tests and rejects to the downside. However, I think this is literally just UCAD doing what UCAD does, comes up, takes everyone out, liquidates everyone's position, and then this is now going to be the major move to the upside. So you might want to look out for OTE positions in London to then take this on a continuation bullish. And then CAD JAP, obviously the inverse of UCAD, where we had bearish positions going in the entire week, and we've had those liquidated today. Supply at the moment in the shorter time frame here has been respected. So if we go down into the 15-minute, we can see this supply has held, and we are still good for sells. The market has come in, liquidated all these positions that were coming in for sells ever since last week, continually taking people out all the way up in this 115-minute move, tapped supply, and is now rejecting to the downside. So we want to see London OTE, something may come in, we'll get an OTE premium entry here and then continue for sells. But just be careful with it, because obviously a massive reaction, hasn't broken structure, held supply, so we are still good to go long term, short term, bearish at the moment. Long term, we were actually anticipating this to turn on us and go bullish. It seems as though the prerequisites for that have been set today with the move that we saw. And it may well be that this now gets tested tomorrow to then move bullish again, but just see what happens with it, because effectively we're closing 8 hour now. See how the next 8 hour develops into London. It may wick up, wick down, then wick up again. London OTE, maybe a good entry for us to get back on this bullish, but we want to really come and see if it tests the demand that's left down below. So if it comes and tests this demand for London again and mitigates it deeper, and then we may get a good trade that will hold a longer position till the end of the week bullish. Okay, that's the forecast, midweek forecast for this week. I'll stop the recording and then we'll jump onto a Q&A if you want.